Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. Well, I hope it's a good morning for you. Yeah, certainly we have now in a very interesting world. So ladies and gentlemen, we're going to talk markets. We're going to see what's happening. This is, like I said, this is a quick video preview for this webinar. So yes, stick around. Hopefully you'll enjoy the session. And let's dig in because there is a lot to dig in. I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen, the 2nd of March, 2026. Yeah, ladies and gentlemen, welcome, everybody. Welcome to a very interesting start of March, right? So, look, of course, it's no secret what's happening right now in the world. Everything is just falling apart. There are issues here and there, but you know what? Let's not rush into conclusion. Let's see the markets. Let's see a few charts, and we'll go from there. Because at the moment, like I said, there are a lot of developments. However, yes, I think that we need to understand that there are certain things that are kind of in a way maybe not manipulated, but certainly we need to keep a careful eye on them. Now look, before we go any further, as always, let's quickly have a read through our risk disclaimer. Let me just put that on the chart, on the screen. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Also, I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Made a mistake here, a grammar mistake. Good morning, everyone, ladies and gentlemen. So, I hope you're all having, like I said, a wonderful start of Monday. If I can, this is the thing: it's very difficult to use the word wonderful nowadays. Although I'm trying to stay positive. However, I do understand that the world is on a brink of some sort of like a collapse in a way, or at least it looks like that. But certainly let's try to see what we can do and how we can position ourselves and what's happening in the markets right now, because the markets are really interesting. And I'll tell you one thing, because I stayed up late and I stayed up and I wanted to watch the opening of the futures at night, and honestly I was kind of expecting a little bit of a different picture. Nevertheless, let's see. Also, look, before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, first of all, I want to actually pick up on the economic calendar, just to get the get this out of the way, and then we can actually talk about the current problems, geopolitical problems. Now look, Monday today. Now we know that some stock exchanges, some bourses are closed, especially in the UAE, and if I'm not mistaken, let me just double check again very quickly. It was the UAE, I think, and also Oman, I think. Yes, Saudi Arabian. No, wait, Saudi Arabian is open. Yeah, it's open. Okay, so we do have, like I said, interesting. South Korea is closed. So yeah, look. For now, like I said, the data that we're getting, let's focus on one thing and then we'll jump into another. in terms of economic data, let's have a look. We had retail sales from Germany coming out, so those are a little bit on the lower side. Similar story with Swiss retail sales, which are not really, very good, very helpful here. And being at 2 + 2.8, the expectation was for just a gradual decline here of 2.2 by 1/10%. No, it dropped to -1.1%. Now that's a bit of a problem in my opinion. Look, in terms of going further, we're expecting some numbers coming out this week. The ISM manufacturing PMI. So this is coming out today. We'll keep an eye on that. Of course, apart from what's happening in the Middle East, certainly we are still having economic data sets. Now, how much relevant will that be? In my opinion, everything will be very, very relevant because it seems like the economy is still living on its own terms. But again, I will talk about that in a bit because let me just go through the economic calendar first. So ISM manufacturing PMI, we're expecting a little bit of a lower number here. So let's see how low is it going to be, or actually maybe it's going to surprise us and come out higher than the previous Tuesday. Tomorrow, Japanese unemployment numbers are coming out. So that's an interesting figure we're going to be watching because, again, a lot of things revolve right now around the BOJ, because again we know that the BOJ wants to go for hikes, but if unemployment rate comes out higher, a little bit higher, then again that gets pushed further. The whole rate hike idea. Something that the Japanese government right now would be very happy about, because if they can push the hikes as further as possible, then yeah, I think that's working out for them very well. Look, going further down the line, we have some numbers from Australia here, not major. CPI inflation. Okay, so the flash inflation numbers from the Eurozone, so European Union actually. And the expectation right now is for a 1.7, the same as previous. Then not much is happening on Tuesday in the US, but then going into Wednesday. Now Wednesday, we're going to get some Australian GDP growth numbers. So Japanese S&P Global Composite and Services PMIs, and maybe not something not the most market moving event. However, China will be an interesting one. We'll get the NBS manufacturing, rating dog manufacturing numbers, PMI numbers, services as well. Something that's coming out, but that's the rating dog. So look, keep your eyes on that, because again, Chinese economy right now is going to be very important, again, due to some political events, if I can use this word, political events which are happening right now. Going further, inflation numbers from Switzerland. If you are trading something Swiss related, just keep an eye. Keep an eye on the Swiss inflation numbers. So if we're seeing a higher than 0 year-on-year number, then well, maybe that could strengthen the Swiss franc a little bit. But at the moment, I think that geopolitical tensions could be the ones that could strengthen the Swiss franc a little bit. PPIs are coming out from the EU together with the unemployment numbers, so we're watching that. But probably, because this is going to be a jobs week, the U.S. jobs week, and we're going to kick off with ADP employment change. Now, this is one of those the private sector employment figures, basically, and we are expecting a higher number, and this is going to be quite interesting to see actually if this is going to come out true or not. But lately, it failed to kind of meet the forecast. Look at this. Since December, the number keeps failing to meet forecasts, and this is where the interesting bit comes in. So in December, January, right? I mean, February. Look at these. Now, are we going to break the streak? Are we going to have the same again, or actually are we going to see coming out on the better side? If you ask me, just to guess here, I'm kind of leaning a little bit towards something of higher number than the forecast. Why? Again, purely political, because you need a good number in the current environment. You need something that could motivate the stock market, keep the stock market alive, and that's why maybe all tools, all methods, and all tools could be good. So there we go. So again, we'll see, of course, how that plays out. But of course, yeah, I'm watching this very carefully. I'm watching this ADP. I do like the ADP number because I do still believe that it is a better, it's showing what's happening in the economy like more accurately than the NFP, because NFP I kind of lost trust in that one. So it was from the government shutdown, which happened in October and in November, like November time, so October time in the US. Going further, S&P Global Composite Services PMI figures are coming out, so there we go. US again, also we're getting the composite and services PMIs. ISM services PMI. Now that's the number that I think the market will be watching carefully, closely. 54 against the previous 53.8. So let's see if it's going to be on the higher side or not. At the moment, to be honest, I would say it would be difficult to over speculate on this because, again, we're in very interesting times, and I just don't want. I rather wait for the number to come out and then maybe do something about it. But at this point, it's just we're just observing the price action. Going into Thursday very quickly. Okay, so we're getting the Chinese People Political Conservative Conference. This is interesting. I don't think that we'll get some, or maybe something we'll get out of there that will move the Shanghai Composite or something like that, and then it will have its effect on other markets. But then going further down the line into Europe, again some numbers here. From the global construction PMIs, and yes, a few, nothing major here. Initial and continuous jobless claims are coming out on Thursday, the usual, and then we're kind of done. The Chinese People's Political Consultative Conference continues. On Friday, we will see then the European GDP numbers, the estimates, the employment change figures from the EU. Those are finals, but the final ones, but the GDP growth rate, those are going to be the estimates. Now, non-farm payrolls. Now, this is something that we will be very, very carefully monitoring because if you remember last time, we got a very, very interesting surprise here. It came out at 130. Where's that number here? There we go. Look at this beautiful thing. It came out at 130. Honestly, what a surprise here. And I don't want to say anything. I mean, I don't want to, start, kind of being a conspiracy theorist or something. But it seems like this is something that the market really needed and the government kind of really gave them. So there we go. So we got the move. Is this going to be like another, if it's going to come out higher than 130, I'm really going to really doubt that. And this is, like I said, this is where my problem right now with BLS. It seems like the letter L is missing in there, honestly. Like it's, at the moment is very, it seems like it's very manipulated, and we're going to give, what we need to support the economy and whatever, However, look, don't get me wrong. I mean, that has been the case probably, forever, right? But maybe not as obvious, but now it's like very obvious. So maybe that's where the issue lies. Anyway, let's see what's going to happen with the non-farm payrolls, because again, the 130. I mean, at the moment the forecast is on like more than half to the downside from the previous. So it's kind of a more realistic figure. This is the thing. So maybe but if it's going to come out again at like something like 100, let's say it comes out somewhere in between 60K and 130K, the market I think will stay positive, because everybody will think, oh, great, jobs are created. Is is it good, or actually do we want to compare ourselves maybe to the period, like in 2024 or 2023, right? When the normal amount was somewhere closer to 300. Now, if you're kind of, now we're sometimes struggling to surpass the 100,000 K. So that's where the paradox is, we're happy about 130. Yes, that's great, because in comparison to the previous figures, but in comparison to what was back in 2024, back in 2023, I'm sorry, is this good? It's a little bit of a tricky moment here. Look, in terms of the economic calendar, then another number that I'm going to be watching is the unemployment rate, 4.3 right now, but. If it starts, like I said, creeping up slowly higher, then certainly the problem is that we know what the problem is. We know that AI is substituting jobs, and at the moment nobody's kind of focusing on the whole transition period. What are you going to do with those people? So anyway, ladies and gentlemen, so that's regarding all the data. IBPMIs are coming out as well on Friday, so keep your eyes if you're trading something Canadian dollar related. Ladies and gentlemen, let's jump into the charts. Okay, Nikkei 225. Interesting movement here to the downside, which is fine. Look, of course we understand that that on Saturday U.S. and Israel decided to start this conflict, and they were the ones who attacked first, and now the whole region is feeling the consequences, so it's very interesting to see that you're okay to start the conflict, however who's suffering is always the people around, and this is where it's a little bit, I think, you're coming in like strong, you're coming in from far away, because that the rockets are not going to reach you, the one who you're attacking. They're not going to reach you, so you're kind of, I'm okay to go in and attack, but then all other neighboring countries who kind of support you, you're not really protecting them, right? You're not really having your military protecting these countries. No, you're sitting back there, but though the region gets hurt. So yeah, that's a little bit immoral, not to mention the whole part of the war, but certainly, like I said, this is like from the economic side, it is, like I said, it is very interesting, and now we know that everybody's worried about the supply of oil, but I'll pick up on commodities in a bit. Certainly, like I said, for now the reaction is the reaction that we're seeing in the market is kind of anticipated, because we will see indices to the downside. The only thing is that it's interesting is that this whole escalation is not a small thing, right? Everybody agrees with that, and it's not a small thing. It's a big thing in general, right? Which could lead to some big consequences. However, the market reaction right now is we're seeing some negativity, but like I said, we were selling off more when DeepSeek showed up. We were selling off more when tariffs, were announced back in April. And now, like I said, what we're seeing right now is kind of like a normal profit-taking moment, because indices are at the highs, all-time highs here in Japan. Kospi is closed, but this one will probably open up on the lower side. Shanghai Composite, the only thing Shanghai Composite is like really showing some resilience and strength, well, in my opinion, is because you have ships, still oil tankers which destination is China. Those ships are coming through Strait of Hormuz. Other ships, yes, those are not really going anywhere. So look, I'm trying to double check very quickly. Yes, because the Strait of Hormuz is still kind of working in a way, and there are, like I said, there are ships that are currently. I'm just trying to find everything on a vessel finder, but it seems like it seems like everything is, all the satellite positions are switched off. Now that's interesting. So all the ships that are going through right now, who are actually, who are actually in the region, all their locations are switched off. Now this is very interesting. This is very interesting. So that means, in order not to show the real picture, which ships are coming through and which are not. Or of course, the reason is the safety and security and everything. But at the same time, we understand that Chinese ships are coming through, whereas other ones are kind of on hold a little bit. So, and that's where, we're seeing China again, still kind of being resilient and still fighting back. And in general, what I'm seeing right now, in the European markets, those are actually, yes, they're in the lower side, but they're on the lower side because they have gapped down, and because of, during I was up to see the, when the futures are going to open up, and honestly, we saw these, like I said, we saw these decline, but these look, as I already mentioned, these look more like profit-taking moments. The usual normal, when you hit an all-time high, some investors say, oh, you know what, it's fine, I'm going to take some profits now and just back off for a little bit. Look, long story short, for now with Nikkei, what I talked about, and especially from the technical side, I said that, look, if we do drop and stay below the 58,000 territory, I'm going to lean a little bit more towards the downside. So for now, we're going to just bang on the 58,000 zone. And is this going to kind of open the door to some lower levels? I think so, yes. But like I said, at the moment, I'm watching this and I'm seeing like a normal profit-taking moment. It's a little bit of a sell. It's not a sell-off, major sell-off. No, it's just like a correction back down before maybe a possible another leg of buying. So if I'm going to put my usual little trend lines here everywhere, then I'll see that, look at this. This is a perfect hit, a perfect test of this little short-term upside support line taken from the low the 17th of February. So for now, if we remain above this upside line, then yep, I'm going to continue targeting the upside. This is my simplistic approach right now on Nikkei, on some other indices, like with China Shanghai in composite. It's like it's showing positivity. It seems like it wants to go for a higher high. Very simple, right? After we broke the downside line, I talked about this last week, the week before. If we do clear this downside line, then yes, it opens the door to some higher levels. And then my next target is the 4,190 territory. There we go. We came very close. We're now near this barrier. Let's see if we can clear this and go to the upside. Let's jump into Dow Jones Industrial Average. Now, look, this right now is certainly, it's certainly on the lower side here. Okay, this is Friday, right? I'm trying to find. I'm trying to find, there we go, what's happening right now in the cash. We're seeing declines. Yes, we opened, the futures are on the lower side, 48,126 on the cash right now. So we are basically below this hurdle here, this key area of support near the 48,428. So we're currently below this, and we're currently actually near this 100-day EMA, and this 100-day EMA is roughly around 48,113. So I'm really curious right now if the cash index can actually test this hurdle, and if it can test this hurdle, will it rebound from this 100-day EMA shown as the blue line? Now, look, this is, like I said, this is quite interesting. I'm not really putting my bearish hat on yet because, again, what I'm seeing right now is more of a like profit-taking moment, and I'm not saying, that you should now buy the dip or something like that. No, for sure not, because again, it's, we're in a very stable environment. So if for me, it seems like it's just like a market hiccup. But maybe something will come up and the market could continue, let's say, falling. So we're currently living in the environment of headlines, right? And if we see somehow getting big problems with oil supply, then okay, maybe this is where we could see some further declines in the indices, and also if we see, for example, more different airports getting hit, then this is a big problem for the airline companies, right? So, for example, Lufthansa right now, right? So let's see what's happening with the stock because it opened. There we go. Look at this. Lufthansa opened with a major decline, and look at this. It seems like we're trying to fill the gap. So this is what's happening right now with Lufthansa, right? Can I see? Yeah, no, it's okay. So Lufthansa is this British, right? Oh, what's the British Airways? British Airways. Actually, you know what, Ryanair, because it should have a knock-on effect. There we go. Yep, there we go. So yes, airline companies are getting hit. That's for sure. Big gaps to the downside here, but they're recovering. Now, this is, like I said, this is like we're feeling. We might see, like I said, more declines a little bit, but this maybe could be just part of the decline, the overall decline. So that's what I'm saying. Just don't panic yet, because in my opinion, I think that the thing that will bring the stock market down are going to be problems with capital expenditure in the big AI companies and big tech companies, chip companies. This is, like I said, this is where I think that the problem for the stock market could arise, because at the moment, yes, airline companies are falling, but defense, Rheinmetall, let me just, Rheinmetall, there we go. Let's see what's happening with these guys. Yeah, they gapped up. They gapped up today when they opened up. Now we're seeing a little bit of a drift lower. Wait, BAE Systems, can I... there we go. This one is also interesting. There we go. BAE Systems. Congratulations. This is another big military company in the UK. And look at this. Beautiful gap here to the upside. So, the drop in some of these sectors like airline and aerospace companies, aerospace sector, it seems like it's getting offset by military. So again, that's why I'm saying, that's why it's not really as straightforward as you think, that we should be selling now because there is a conflict or something like that. No, there's plenty of benefiters who are benefiting right now from this, and military, of course, is the one. Also, there will be other companies that will, we're waiting for the other companies from other sectors like Caterpillar, for example, right? A big company. Where's Caterpillar right now? Do we have pre-market? No, it's not open yet. In about half an hour. Okay, yeah, pre-market figures will be in about half an hour. Let me just actually find. Maybe I'll find this a little quicker. Just let me just double check. I'm looking at my other source here. No, don't have anything yet in there. But okay, sorry. No, there is a little bit of a decline. So we will see a gap down here, 723, 724 ish. So we will see an open today here somewhere, if of course it doesn't change. But look, companies like these, they're benefiting, from from some disasters, because again, everybody needs their, their equipment. So yeah, look, long story short, what I want to say here is that yes, we're seeing declines, so Dow Jones here, we're below this hurdle. Okay, we're near this 100-day EMA. Okay, let's see if we can rebound from it actually and push back up, because it's going to be a huge gap to fill. And the S&P 500, similar story actually with the S&P. Let me just check where we are at right now. The S&P 500 is 6,762. So we are below my lower side of the box here, and 763. So we're actually just a little bit below the box. Okay. This again, like I said, if it just stays like this, I mean, we might see a gap fill today. Don't be surprised, if you see something like that, because again, I think that the market needs a little bit more negativity and a little bit more evidence of some sort of disruptions. We are seeing, yes, we're seeing disruptions, but it's like, no, I need NVIDIA to fail. This is how it looks. I need NVIDIA to fail. It's like if suddenly a ship with NVIDIA chips cannot travel somewhere, then that's a problem. Oil, still we have electric cars. We can live with that, right? So that's what I'm saying. So just keep in mind, okay, that and nothing is like straightforward as it seems initially. There is always some sort of like hidden agenda somewhere. Like there's, follow the money, okay? So, oh, by the way, okay, NASDAQ, let's quickly take a look at NASDAQ. Yes, what I'm seeing here is that it's also stuck here. Look, NASDAQ, where's NASDAQ? Let me just double check what's happening there. 24,460, 24,460. So we're near this area actually. So we're not really critical here or something. We're just near this little hurdle, the lower side of this little box. So again, we're going to see a major gap here, of course, to the downside. But let's see if this area holds. If it does, then I'm sorry. We could see a little bit of a gap fill. Going into the U.S. Opening bell. Let's see if that's going to play out. The German index DAX, major gap to the downside. We are trying to, climb back up, but the question is, is this going to be enough, or are we going to actually fill this gap? So at the moment, I'm trying to figure out, just to see what's happening here. Look, DAX is a little bit more negative in my opinion at the moment, and it's actually more vulnerable at the moment than other ones, and it's looking a little bit more bearish. So I think that DAX could be the one that that could be taking a hit, and a stronger hit. However, look, if we somehow remain above this 24,720 territory, I think that there is a little bit of a chance of a rebound actually. So keep that in mind. If we somehow fall, again below the 24,720 territory, we stay below this, then I will lean towards the 100-day EMA right here, which is roughly around the 24,500 zone, and then we'll just take it from there. The UK, now look at this. UK is showing some signs of weakness, but then again, is it, okay, yes, I was kind of expecting a little bit of a bigger decline, right? I mean, what I'm seeing right now is just, like I said, it's profit taking after hitting an all-time high. Congratulations. For those who are, are selling out right now, selling off. So, long story short, for now, I am, like I said, yes, I'm maybe leaning towards the downside, but look, I will say it this way, purely from the technical side, if we somehow climb back above this 10,846, 47 territory, honestly, I really don't think that we're done with the upside. I think maybe we'd actually start ranging. So just be careful right now, okay? The moment we're near a key area of support around that, just a little bit above that 10,800. If we continue to trade above that, then I think, like I said, I'm watching then the 10,846, 47 zone. CAC 40. Now the French index. Wow. Look at this. Wow, wow. This is just amazing. Let me just find my CAC 40. Oh, come on, honestly. CAC 40, come on. Right, okay. I think my computer is lagging a little bit. So, yeah. Okay, there we go. Is it coming through? Is it coming through? Okay, right. Okay, so yeah, found it. So we did gap majorly, like big time, to the downside here. Beautiful move. Don't get me wrong. We were like on you know, I was talking about this one on Friday, and I said, look, we're near this 8,630, but look at this gap here to the downside. Major move lower. So long story short, you know, congratulations to those who managed to capture it. That's first. But if you missed this, I really don't think that we will not fill at least some of this gap. I'm not saying the full 100%. I'm thinking maybe around like maybe 70% of this gap. So maybe going back a little bit above the 8,500, just fractionally. Maybe that could be the case. But again, I don't want to rush into conclusions. And for now, if we start falling below the 20-day SMA, which by the way, you can see here, 20-day SMA within the Bollinger Bands, it provided fantastic support here. So if we do drop below that, then yeah, I think further declines here could be possible. Let's jump into DXY, dollar index, of course. There we go. We had the jump. I was warning you last week, the week before that, I was throwing out this. I said, watch this 98 barrier. There we go. You know, there we go. There is demand for dollar, not only because it's a risk currency, but look, there is a lot of military that is needed right now, and you know, the U.S. is one of the big providers of military equipment, and you know, they need to buy from the U.S. So congratulations, dollar demand is needed. So okay, great. You know, the dollar demand is there, so dollars are needed to purchase equipment. Hey, stronger dollar. There we go. You know, it's like I said, it's a really funny. Excuse me. Or if actually the wrong word to use here, funny, because nothing is funny nowadays. It's interesting, you know, it's really interesting that how, you know, money works in general, and how politics work. And, you know, if you want to understand why certain things happen, just, as always, follow the money, right? You know, the dollar was kind of getting hit, so a little bit of strength was needed, but you don't want to raise interest rates because you know, that's one of the options to kind of strengthen the US dollar. So you know, how can you bring the US dollar back to life a little bit, or make it, you know, attractive? Conflict, as always. You know, conflict has been the answer to all market downside moves. Long story short, for now, we're watching this. I think more upside could happen here. We could end up traveling to the 200-day EMA, but I'm only aiming for this area, 200-day EMA, or the 99.49 zone right here. So, long story short, yeah, it's an interesting moment here. So I'm not really getting very bullish on the US dollar yet, because still, if we do understand that if you need to attract, as I keep on saying, I'm repeating myself. If you need to attract companies into the U.S. and you want them to establish factories, you don't need high energy prices, and you don't need a strong dollar. Very simple. So I think that eventually this should all reverse back down. VIX, yeah, of course, volatility index. There we go, boom, to the upside. Look, again, I'll give it a little bit more options here for the upside, maybe this downside line, but in general, yeah, I think eventually it will fade away. Let's jump into the Forex world, ladies and gentlemen. AUD/USD falling down the cliff. Yes, we are dropping back below this downside line. It's no longer needed. What we're watching here is, oh, why did I get rid of that? What we're watching right now is the this little kind of range here where we're stuck right now. I think that we need to do it this way. There we go. 0.7019 on the downside, 0.7147 on the upside. So ladies and gentlemen, if you want to see some higher moves, a break through the upper side of this little a box here is needed. If you're looking for some lower areas, then yes, a drop below the 0.7019 zone would be required as well. So keep that in mind. Now, sorry, I need to start my voice again. AUDJPY, now this is very interesting. Look, AUDJPY, our risk on, risk off monitor, is now showing us that it is recovering after this big decline, which is logical because, you know, this is our, like I said, this is our risk on, risk off monitor, and now we're seeing a strong move back up. We should be in risk. We should be in risk off right now. What I'm seeing right now is it seems like risk on back to normal. So the question is then, like I said, are we not seeing just some profit taking a little bit happening, and then we will resume the, you know, once we see a bigger decline, then we'll pick up on the stock market again. Something tells me that this could be the case. Now jumping into, ladies and gentlemen, EURUSD very quickly. Yes, also a big decline, but this is like mainly driven by the US dollar. However, from the technical perspective, everything is working out nicely. I talked about this idea. I said that look, if we do fall below the 1.1765, I'm going to lean towards the downside, and there we go. We are going further south. My next target is the 1.1670, and then we'll just take it from there. EUROJPY. Now this is again another good example. We are pushing back up. If everything is that bad, why are we pushing back up? You know, why is this a little correction back up? So again, I'm not going to rush into conclusions, okay? But certainly for me, the downside scenario right now at this point, look, I would prefer to wait for at least a drop below the 182.64 territory right here, and if we can get that, then wonderful, amazing, you know. But certainly at this point, it's kind of leaning a little bit more towards the upside now. But again, for the upside, I need a confirmation break here above this 184.92, and then we'll just kind of take it from there. Let's jump into the British pound. I don't want to spend like too much time on Forex because I think the commodity sector is a much more interesting place to be right now. GBP USD, beautiful decline, but ooh, it's amazing. Look at this. My mission has been accomplished. I talked about this on Friday. I said, look, if we do fall below the 100-day EMA, my next target is the 1.3346. Boom. Amazing. Everything is very much in line with the idea of this falling channel. But now I'm going to shift my... Look, I'm going to take this bet. I'm going to say that, look, if we do remain above the lower side of the falling channel, there is a chance of a reversal back up. I think so. GBPJPY, similar story, but this one here is looking more to the downside, not because of the strength of the kind of Japanese yen here. No, it's more of a problem of this of the British pound. There we go. Stalled there a little bit. Of the British pound, yep. That's the, in my opinion, that's the bigger problem. So hey, let's see if we can actually get some sort of a push, maybe back up here. But you know, maybe the pound can recover. But something tells me that no, that's not going to be the case for now. Let's jump into USDCAD. Okay, look, dropped beautifully. We're seeing a reversal back up right now. However, if the whole saga with oil doesn't change for now, if we still see some oil supply disruptions, then yes, I think this pair could drift nicely to the downside just purely because although US dollar right now is on the strong side, but you know, the Canadian dollar could pick up just because if oil suddenly starts rising further, then yeah, we could see, like I said, we could see this pair moving nicely to the downside. USDJPY, beautiful pop here. Yes, a strong US dollar. Congratulations to the whole, you know, the whole scheme of making the US dollar more stronger, or more strong, stronger, more stronger. Well, yes, more, more strong. And the thing is, like I said, the thing is that now at this point, what I'm looking at here is the barrier here. This is the 157.72. The interesting bit is, like, if this would really be a very, very bad moment in the economy, honestly, I think the Japanese yen would overshadow the US dollar. We would be all sitting in Japanese yen right now, but something's off. USDCHF, beautiful movement here. Now this is a very nice technical picture, a very nice technical picture. And my question right now is, are we going to see a move lower here at some point? If we do get a clearance of the lower side of the triangle here, then yes, of course, I'm going to open the door to some lower areas. But if we are going to see, if we're going to see a drop here below the lower side here, the lower side of this triangle, and yes, I'm going to go lower. For the upside here, I need to break of the upper side of the triangle. Very simple. At the moment, I'm just observing the price action, and then we'll just take it from there. Ladies and gentlemen, let's jump into commodities. There we go. Yes, gold. There we go. Of course, a big push. Now, I was a little bit more on the skeptical side with gold. However, there we go. I was proven wrong. I have to admit this, because I was talking about gold and silver, and I was kind of leaning a little bit more towards the downside on those. Look at this. I did the video here, quick update on gold. It kind of worked initially. The idea was fine, but then everybody started jumping into gold, and now we're like traveling back. It seems like we want to go back to the all-time high. Okay, look, I don't want to rush into conclusions yet. Okay, everything is looking quite positive for now, for sure. But let's just be very careful, because again, if the stock market does reverse back up, I don't know if gold will remain elevated like this. Silver also a great move here. Look at this. We reached my 50%. I talked about this as well. I said that I'm going to aim for this level. But if we do clear the 50% on the Fibonacci retracement, then my next target is the 61.8, which is roughly around the 99.66 area right there. Gold and silver ratio. So yes, gold right now is only 56 times more expensive than silver. We were on the higher side a little bit here, but hey, I talked about this. I was aiming for this 56 kind of 0.4, 0.2 zone, and yep, there we go. We have reached this area. Now I want to see if we can actually drop a little bit further south here. I don't know, like again at this point, I think that yeah, maybe there is a chance of a further decline here. Let's not overdo this, of course, but yes, there is a chance of further declines. Platinum, let's have a look at platinum, ladies and gentlemen. We pushed, and actually we stayed. Where's my monthly chart? There we go. We stayed, finally we stayed on the monthly chart. We stayed above my 2,299 zone. So now the question is, can we go further north? Can we overcome this 2,478 territory? If we can, great. I will go further north. Palladium. Oh, by the way, if in terms of if we suddenly fall back below the 2,299 zone, then yes, there is a chance of a drift lower. Palladium. We're near, yep, 38.2 again. We're testing this area again, and I don't want to rush into things. Again, I'm watching this area. If it somehow continues to provide resistance, then okay, look, I think that just a second, I'm trying to find the volatility index right now. Yeah, okay. So if we do, like I said, if we do push through that 38.2, my next target is pretty straightforward here, the 50% on the Fibonacci retracement. But of course, it's if this provides resistance, if we continue to see resistance, then yeah, another decline here could be possible. So what I'm going to do here is I'm going to do exactly this. I'm going to draw this upside line. It makes sense. If it clears it, I'm going to go lower. Let's jump into copper. Just a quick glance. Nothing major here happening. Sugar, my beloved sugar jumped higher a little bit, but that's fine. Oh, we're actually above the 14.05. Okay, that's absolutely fine. And okay, ladies and gentlemen, honestly, I cannot wait until I see this. Oil. Okay, so the problem right now with oil, of course, the conflict is the problem. We do understand that there are problems for ships going through the Strait of Hormuz, but look, the problem is this, that currently some ships are coming through, and we can see that by switched off radars, their location devices, identification devices actually more. So, but I think that what's happening right now, another thing, but what it seems like what's happening right now, that certain ships are coming through, for example, like Chinese ships are coming through because the strait is controlled by Iran. And some other ships are not coming through, not because they cannot go through, they can. It's just that there is no, let's say, restrictions right now on passing through the Strait of Hormuz, but the problem is insurance. Not every company right now, insurance company, wants to insure that ship, and this is where the problem arises. Now, not every insurance company wants to insure that ship, and not every logistics company wants to actually go through the through that kind of strait without insurance. Now the problem is also the premium, because now, of course, it's a green light for the insurance brokers to put big numbers on every ship. I just want to see CI. There we go. This is what I'm looking for. This company here. Yeah, this is not opened up. Okay. Is this? No, this is not open. Okay. Look, like I said, we're watching the oil market very carefully here. We're seeing, we saw a major decline here. Now, this is very interesting. It gapped up to the upside. Yes, fantastic, because this is what kind of everybody was expecting, that this is going to go higher. But then it retraced, and look at this. It kind of almost, it like filled the 70% of the gap. This is what actually one of the rules that, it will always kind of fill around 70% of the gap, and this is exactly what it did. Traveled lower, and now the question is, can we go further north? Now, of course, every headline right now is talking about how oil will go to that $100 barrel. Look, I would say this way: do not rush. Okay, let's see what's going to happen. Let's see what's going to happen in the sea. And if we do see a clearance of that, strait, and every ship can pass through, then yeah, certainly. I think then the price of oil here could go back down. But if not, then okay, I'm not saying anything. I'm not going to deny that the price is going to go higher. Yes, my next target in this case is the 77.57. We're not far from that. I think that's a good target. Let's see if we can reach that. But first, what I'm going to do, if I want to go for that higher level here near the 77.57, I'm actually going to wait for a break here of the 75.33 zone. If we can do that, amazing. More buyers could join in. Brent oil. Brent oil, there we go. Beautiful, again, also filling of the gap. Beautiful decline. Very straightforward. If we somehow drift back up here and climb above the 80.34 territory here, then yes, I'm going to go to the upside. We're not far. We just need a little bit of a better boost here. Just looking at the indices right now, looking at the FTSE, and this is reversing back up. Honestly, this is, like I said, this is a market wow. Natural gas, of course, natural gas is rising, and what can I say? Natural gas, where's my cash index here? Yes, natural gas is rising. This is understandable. There are issues, so hey. For now, look, this is working out nicely. I talked about this idea of a falling wedge pattern, and I talked about it on Friday, and I warned you, and also I did this little video where I talked about natural gas. And I said purely from the technical side, it does look a little bit more positive because it's doing one of my favorite patterns here, a big decline and then a gradual decline, and then this gradual decline is within a falling wedge. Now that's even, like I said, even looks more positive. So let's see if we can clear this, okay? Because while we remain inside the pattern, still it could go lower. But if we do clear the upper side of the this falling wedge pattern, then okay, great. This is where we will consider higher areas. Let's jump into the crypto world, which is insane. Because why? Because it's not doing anything. In the normal scenario, that if when something like this happens, we should see some lower moves. Especially given the fact that the US dollar is on the stronger side. Everybody should be saying, oh, crypto should be to the downside. But at the moment, yeah, it's just standing there. It's not doing anything. Bitcoin Cash, yes, it's moving lower, but it's not really I need to get rid of this alarm here. But it's not really something, like worrying too much. It's just, like I said, one of your gradual profit-taking moments. And if we look at it from my favorite patterns perspective, a big decline and then a gradual decline after that, it kind of tends to be pointing a little bit more to the upside, actually. But again, I'm not going to rush into that. For now, I'm just observing the price action. Ripple is also holding. Look at this. Everything should have been selling off because, again, the US dollar is strong and blah, blah, blah. But look at this. The 1.3415 is holding here on Ripple. So it doesn't want to go to the downside. It doesn't want to do that. So, we're being careful right now. Ethereum is also holding on. It did have it actually on the contrary. Yesterday it had a strong move to the upside here, and then it wiped out all the gains. But nevertheless, why did it straight away go higher? Well, because maybe nobody still believes in a big further escalation in this, in that region. If we do see a further escalation, then yeah, okay, then there's a problem. I think I will revise everything what I'm saying right now. But at this point, because it is how it is, it doesn't look that bad. That's my problem. Yes, it's bad from the geopolitical side, but in terms of from market side, I think the market is just, like I said, waiting until there's going to be some sort of like chip supply disruption or something. Then there will be a problem. Ethereum Classic, yep, we're stuck here in this range, so that's fine. Litecoin, again, beautiful. Looks like a bullish flag, honestly. Pole, a gradual decline. There we go. Looks like a bullish flag. Seriously, let's see if this is gonna happen or not. But for sure, if it somehow pops above the 56.83 territory, yeah, that's a confirmation of a nice bullish flag here. Dogecoin, it moved lower, but it's not. It's like just a regular gradual decline, So if it falls below 0.0878 territory somewhere here, then I'm going to lean a little bit more towards the downside. But at the moment, okay, Polkadot. Polkadot looks bullish. This is a pole. This is a flag. It's a bullish flag. However, don't get me wrong, I've seen this happening in the opposite direction, so I don't want to rush into conclusions. But if we somehow push above the 1.6550 territory somewhere here, okay, look, I'm going to go to the upside. I'm not going to really pretend that this is, we need to be worried or something. No, this is going to be quite the opposite. It's going to look quite bullish. Finally, Tron. Tron here, near key area of support near the 0.28 territory. So if we do fall below this area, I'm going to lean towards the downside. But at the moment, yep, I am just being very careful, very cautious. This upside line needs to go, but I think I'll reuse that and I'll recycle that. Always recycle. Hidden message there for you. But look, if we do break this downside line, I think that this is going to be the better option here. If we do break the downside line, then yes, great, I will consider some higher areas. Ladies and gentlemen, that is it for this session. And again, I want to remind everybody not to panic yet, because on one hand, everything does look very bad, very tragic in a way, you know, and in general, it is a tragedy because innocent people get hurt, especially, you know, you see those reports when Israel and US are like, you know, bombing a school with children, and like, honestly, you know, you couldn't find a better target, but to bomb children, no, come on, it's like, and that's what, like I said, that's where the issue is here in all this. Certainly, of course, I'm not, you know, I'm not justifying the kind of the Iranian government as well, because again, it seems like they're all messed up. They're all messed up, and one's on one side, the other one's on the other side. Like, you know, it's just that us, the people, are always suffering. That's the problem. You know, nobody cares about us. Anyway, ladies and gentlemen, thank you very much for watching and listening. I hope you found it useful. I think, like I said, the market is at a very interesting spot right now. It could go, like I said, it could go heavily to the downside, of course. You know, I don't want to sound like as if I'm still very bullish or anything. No, I'm just trying to have my realistic cap on. And I do understand that there are issues. And I think a lot will be headline driven. So, but in general, I would say, you know, just be careful where you source your information from, and just try to have your own cold judgment to everything what is shown, you know, to us. Anyway, ladies and gentlemen, thank you very much for watching and listening. As always, stay safe, have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you on Wednesday. Bye for now.